the rate of implied volatility per asset class. Where do you think the boys are going with this? Or boys and girls, whoever it is. The rate of implied volatility per asset class.
I don't know.
Let's take a look. So, over the last 3 months, implied volatility across the equity markets and other assets have gone down quite a bit. See, I'm really good now because I play Wordle every day.
Is that what it is?
Yes. So I play Wordle every day. So I have actually, been able to, read this stuff. Today, we're going to explore what
obviously nobody else has, but you.
Today, we're going to explore what the rate of change is for the implied volatility decline on average in all markets, and then separate them by asset class. Okay, so the last 3 months, this person
look at the rate of change here.
Yes. So our research team is correct. Over the last 3 months, implied volatility has really gotten whacked. Mm-hmm. And when we say it's gotten whacked, what it's done is it's actually normalized. It's come down to a level where it probably should be. Mm-hmm. It was high for a year. It's finally come down to a normal level. But today we're going to look at that rate of change for the implied volatility decline, and then take a look at it by different asset classes. See kind of, hey, maybe what's moved the most or the least, or what has room to go. Let's see. Let's go to the next slide. So we looked at the implied volatilities in SPY, Qs, IWM, that's 3 different stock indices, gold, currencies, and crude oil since last October. And the reason we did that is because if you remember last October, that was kind of the last high that we had in implied volatility. You remember they scared the children in October.
Yeah, okay. most definitely.
So we then computed the average decline in the IV markets, in IV markets, and then we compared the declines in implied volatility from one asset class to the next, just to give you some context. Let's take a look. So on average, we saw assets lose around 40% of their implied volatility since October, but the majority of the loss happened in equities. Now just think about this for a second. When stocks lose 40% of their implied volatility, do you know what that means? On both sides. One, it means a fear factor we reduced the fear factor in the market by 40%.
It's huge.
You would think that that's like moving a cruise ship in a tiny little, in a bathtub type thing. Because when you start to think about it, how can all the global fear...
In a river, you meant like...
No, I didn't. I'm saying it's like you can't fit either one, it doesn't matter. But you can't even imagine. Just think about this. Imagine taking 40% of the fear out of the global marketplace, out of the whole scene, out of all the news, out of everything there is. Mm-hmm. How do you lose 40% of all the fear since October? How's the world?
You wouldn't think you could even if you tried.
That's exactly my point. That's why it's a cruise ship in a bathtub. Okay? Because you couldn't think about how to do
this up, aren't you?
I mean, well, here's the problem. When people think about the kind of the enormity of everything that we do and talk about and all this other kind of stuff, when you start to put real strategic ideas around it, it's almost impossible to fathom a 40% decline in implied volatility, which is
nothing changing anywhere. You're talking about news being, the reason why
in the whole world
moves.
You can't take 40% of the fear out of the world since October. It makes no sense at all, but it happened.
That's crazy.
And if you look here, you can see these are since October.
When you put it that way, it's pretty compelling. It's crazy.
Yeah, when you look at assets since October of 2022. In the SPY, 40%. That's the S&P 500. That means 40% of all the fear, all the crap that everybody always talks about, nonstop, it's over. 40% of that fear is gone. In the NASDAQ, 36%, and IWM, 40%. Those are the stock indices. Currencies down 30%, gold down 21%, and USO down 25%. That means a massive amount of fear came out of the markets. So what happens in the process? Well, the markets rally a little bit. Okay, because less fear, they rally, and everything else kind of stabilizes. Makes kind of sense.
When you put it like this, do you think the market's rallied enough since
This is the gazillion-dollar question. Have the markets rallied enough? This is the argument right now that the bulls are making. If you're a semiconductor bull, or if you're a S&P bull, or if you're a tech bull, or
we're almost unchanged since October.
I understand. And that's what I'm saying. That's the argument the bulls are making now, is that, hey, we had a 40% decline in implied volatility. We need to see a 40% rally in the market. Hasn't happened yet, but I'm just saying.
Sure.
We have had, what, a 20% rally?
Off of the lows.
Yeah.
Off of the lows.
Since October. I don't remember what the October low was. Was it 3606, or was that a different low?
Let's see, an E-mini S&Ps. Hold on one second. Yeah, approximately.
3606, right? Mm-hmm. So you had basically it's a little over 10% rally.
Yep.
So vols declined by 40%, and the markets rallied only by 10%.
I mean, you had that one spike down. I know it was overnight to 35.30 or so, but really tradable was.
Since the majority of high implied volatility underlyings are concentrated in the equity space, the average starting IV was 45 in October. The equity indexes had the largest loss in terms of implied volatility on a percentage basis, dropping about 40% in 3 months. Assets with lower implied volatility to start, like currencies, gold and oil, experienced drops of a sizable magnitude, but they were not as severe. There's a couple takeaways here. Fear is fear. Equity fear, it goes over into other different, high implied volatility in equities, high implied volatility everywhere else. Volatility contracts, it contracts everywhere else. Sometimes more in certain places, in this case, more in the equity marketplace. All of that makes sense. But I think that the takeaway from today's discussion is just to look at the sheer size of the volatility contraction and how it impacted, stocks more than anything else.
Pretty crazy when you look at it that way.
Yeah.
Good job. Good job by the team. Made me look at something differently. Let's take a quick 90-second break and come back. We got more Tay Trade coming at you after this. Ooh, we got Scott Sheridan coming to house. This is Tasty Live. Tasty.